Hello, I'm Andrew Dennan, Chief Executive Officer of AIM-listed natural resources company, Ascent Resources PLC. I'm pleased to be in front of you today and provide you with an update as the company continues to progress its claims in Slovenia alongside the recent news of a new material strategic investment into the company by MBD Partners for £1.5 million at a 35% premium to the share price at that time. By way of recap, Ascent has a long history in Slovenia where it's invested over €50 million into the development of a tight gas project with over 400 BCF of initial gas in place. The company drilled and stimulated 2 new wells in 2011, which flow tested with over 12 million cubic feet flow rates per day, and which validated the development model for the full field plan. The initial wells were then suspended until a gas sales agreement was secured, which then followed as the project secured a GSA to export gas to INA in Croatia. Since securing the export route for the gas, the project then had a number of significant delays imposed upon it as a result of Slovenia's administrative functions, most notably the environmental agency ARSO, which sought to disregard the opinions of the expert bodies it commissioned and continued to delay the re-stimulation of the wells by a number of years. More recently, in May last year, the government of Slovenia approved amendments to the country's mining law, which now prohibit the use of any form of stimulation to produce hydrocarbons. These measures amount to an expropriation of the company's investment in Slovenia and breach Slovenia's obligations to Ascent as a foreign investor. Accordingly, the company is pursuing a significant monetary damages claim against the Republic of Slovenia under the Energy Charter Treaty, which is funded via a damages-based agreement with specialist litigation and arbitration lawyers Enyo Law. The arbitration tribunal panel has been constituted, and earlier this year in July, the company filed its memorial on merits and jurisdiction, alongside which it updated its damages calculation to €656.5 million. The process will now continue to follow the structure of the ICSID arbitration process, and it should be cautioned that in the event the company successfully wins its claim, amounts received may be significantly less than the amounts claimed. The company has still got a continuing interest in the project, which is currently producing circa 90 to 100,000 standard cubic metres per month from the PG10 and PG11A wells. Earlier in the year, the company was successful in resolving a long-standing dispute with its JV service provider, which resulted in an agreement to pay approximately 70% of the amounts being claimed, and which also restructured the ongoing monthly fixed fee down by approximately 55%. The concession was due to expire in November. However, early this year, Slovenia approved additional measures to accommodate the ongoing administrative delays resulting from COVID and approved a law to extend concessions expiring within the next 18 months by a further 30 months. The JV partner has informed the company that the application was submitted in time, and the company now expects that the concession expiry will be in May 2026. The company is still pursuing a dispute with its JV partner over the parties' different interpretations of the RJOA, relating to the application of the baseline production profile and the distribution of proceeds generated from all the wells in the concession area, while Ascent is still in a preferential recovery position. After launching domestic arbitration proceedings in December last year, the merits hearing concluded in June, and the parties are imminently awaiting the outcome of the panel's deliberation. The company believes that amounts of over €3.5 million are owed over the last 3 years, and in the success case also expects to receive additional production from other wells in addition to the PG10 and PG11A wells on a monthly basis going forward, which would allow the company to partially mitigate its losses resulting from the expropriation. The company has also recently announced the signature of a new strategic collaboration agreement with MBD Partners, alongside MBD making a material strategic investment into the company for £1.5 million at 3.5 pence per share, representing a 35% premium to the share price at the time of announcement. MBD is a company controlled 100% by Mr. Ibrahim Diab, a highly experienced natural resource investor with an existing portfolio of natural resource investments, as well as an inventory of new business development opportunities, which are thematically consistent with the company's strategy to grow in natural resources in Latin America and Africa. The company is delighted to welcome MBD as a new 20% shareholder and a cornerstone investor, which positions Ascent to be well funded as it continues to execute on its business activities. So in summary, the company is now well positioned, having recently secured a new £1.5 million cornerstone strategic investment at a significant premium to the share price, exposed shareholders to near-term results of the JV partner arbitration dispute with an upside of potentially €3.5 million plus over the last 3 years, as well as the ability to increase future monthly revenues beyond only just PG10 and PG11A. The company over the summer filed its ECT memorial on merits and jurisdiction with an updated €656.5 million damages number, and also secured ATE after the event insurance in relation to the ECT claim. So the company has a lot of activity going on in the short and medium term and is well capitalised to conclude on its current objectives. We look forward to updating you as progression is made. Thank you.